Commercial real estate loans 101. That is what we are going to be talking about in today's video. Okay, let's get into this. Hey, Charlotte area small business professional. What we are talking about in this concise video is the typical interest rates, how much down, the loan term, and more. Because I'm getting a lot of people that ask, they say, hey, Jeff, like, what's the commercial loan interest rate? Well, I mean, all this stuff varies. It all depends on you, your particular situation. But we do have answers, just some generalities that are going to help you. So let's get started. Just real quick, I need to tell you, I am Jeff Taylor, commercial realtor with North Group Real Estate Inc. here in Charlotte, licensed broker since 1991, retired commercial appraiser, and lived in Charlotte since 1968. So I know the Charlotte market. All right, so my first question that we get is like, okay, how much of a down payment will I need? And typically this is for like office condos in the Charlotte market. So the answer, you see right there, typically 20 to 30%. And then I put my little disclaimer down here. You can see my sources that I use to kind of back up the information from here. It's like from Wells Fargo, it's from Bank of America, it is from FICO, it is from Experian, and a lot of other sources. So, okay, let's keep going. So typically 20 to 30% is what you're going to need for your down payment. Okay. Next, what is the interest rate for a commercial loan? Oh, I mean, I get this all the time, and it's like, well, depends on your situation, but no one wants to hear that. Okay, right? So it does depend on your current situation, but regional banks and credit unions, it's going to be like it's currently 3.11% to around 5.25%. It's just a good ballpark, right? It's going to be a little higher than your typical residential interest rate. So that gives you a good ballpark. And then we've got the disclaimers down there. So this is just giving you a good ballpark. Okay. All right. So what's the length of the term and the amortization period? Well, it depends on your specific situation, but 3 to 10-year term. Okay. With a 5 to 10-year call or balloon payment. So if you can't pay off the loan by the amortization, well, over the term, 5 to 10-year term, then what do you do then? Got this balloon payment, you just refinance. That's what they do. You just refinance the remaining balance. So, you'll have it amortized over like 25 years. So you'll get a lower payment. It's just not going to pay off in the term of the loan. So you just refinance, or if you've got the money, pay it off. Okay. What credit score is required? Well, it depends on your specific situation, but a personal FICO score like 680 but 700 plus is preferred. Okay, business credit score. Yeah, could be looking at that. So your FICO Small Business Scoring Service, the SBSS, 140 minimum for SBA loans. So you just need to know that. And then the SBSS range is 0 to 300. Also, they can look at Dun& Bradstreet's Paydex. 80 and up is what they want to see, in their range is 0 to 100. Experian and Telescore, 80 and up is what they would want to see, and the Telescore range is 0 to 100. How long does it take to close? Typically 45 to 90 days. You get through your due diligence, you get everything to them, they can get it closed typically 45, 90 days. Should not be a problem. All right, what are the closing costs? How much will I pay for the loan? There's a lot that goes into this, but just, okay, big picture, 3 to 5%. Okay, 3 to 5%. I had all these numbers going through all the closing costs, and I was like, you know what? Let's just make it simple right now. We're looking at the big picture. You're just looking to get a handle on things. That's why I call this 101, right? Just learning. Get you acclimated with a commercial loan. Okay. So, if you've been watching my videos for any length of time, you know there's always a bonus. Always a bonus. So, Jeff, what is the bonus? Here it is. What is the typical loan to value ratio, the LTV? And I don't get this question a whole lot, but it's kind of important because it kind of can bite you if you're not paying attention. So first, all right, what is LTV? LTV ratio, it's a percentage between the loan value and the market value of the commercial property that's securing the loan. Okay? So they're not going to loan you 100% of market value, right? I mean, not going to do that. Not going to loan you 100% I mean, commercial loans. I don't think I've ever done that. Like 100% like cash deal. Yeah, maybe something like that, but never with a loan. Okay, so it depends on your situation, but lenders typically they want to see a 60 to 80% loan to value for the commercial borrower. All right, so a mortgage that is considered a high risk is if the um, loan to value ratio is high. Okay, so if you have a high risk loan, your lender usually is going to assign a higher interest rate to that. So that's why that's important, and a lot of folks don't really think about that. So LTV, that is my bonus. Okay, very cool. So if you've liked this video, please give me a thumbs up, or if you want to subscribe, that would be amazing. If you want to learn more about other commercial facets, looking at buy, sell, lease, or invest, Charlotte office, condo market, you'll see other videos popping up down below as well. And leave me a comment. I would love to answer your comments, or if you have any ideas on another video or something that you'd love to see, please put it in the comments down below. And thank you so much for watching.